Hello everybody and welcome back to another video. In this one we are going to go over the top 10 picks for my year going into 2022. Now this first video is just going to be the first 5 because we want to give in-depth looks into each and every one of these stocks because we have a whole lot to go over. So we will go ahead and announce those 5 stocks right now, and this was the last 1 year performance of all of them. In no particular order, the first 5 we're going to go over today is ROKU Incorporated, Chewy, Alibaba, Corsair Gaming, and Lockheed Martin. And you can see the performance over the last year for all these. Negative 28% for ROKU, negative 33% for Chewy, negative 47% for Alibaba, just got slammed, negative 39% for CRSR, Corsair Gaming, and then the only positive one of these 5, which is up 3%, which is ticker symbol LMT, Lockheed Martin. But before we jump into all that, if you haven't got signed up with M1 Finance, they're having a huge promotion where you can get $50 for getting signed up right now. I told you guys, I said, give me one more, give me up to 125 before the new year, and I'm filming this on New Year's Day, so we just fell short of that goal. But anyways, while we didn't hit 125 before the new year, if you could do that now, that'd be great. This link is down below in the description, so just scroll down, click the link, get signed up, and get $50 for doing so. It's absolutely free, no fees whatsoever. Thank you guys so much, and if you haven't checked me out before, my name is Jordan, I'm a millennial investor, and I track my net worth, or I should say my invested net worth, and how I plan to get to $1 million by my 40th birthday. This is my goals tracked month over month, and where I plan to get to them, how I'm doing so far. But without further ado, let's go ahead and jump into the first one, which is ROKU, and let's go ahead and cross out all of these. Now, first off, with the 1 year performance with all these, I think what's important to look at here is not so much what the company did in 2021, but where they're going in 2022. Because with pretty much every single one of these companies that have been public for at least the last several years, if you look at the 5-year charts, it's definitely a different story. Plus 759% over the last 5 years, and that's even with a horrible 2021. And so now this is a company that I think right now, while they're growing revenue, they're finally starting to grow the profitability, it may be time to add on to a position. Jumping over to Seeking Alpha here for ROKU stock, and we scroll down, if we look at the revenue and earnings projections for the company, in 2021 they're going to finish out at $2.8 billion. They're expected to ramp that up 36% to $3.81 billion, and then projected to ramp up another 31.4% in 2023 to finish out at $5 billion even. Now earnings per share, which is basically the profitability measurement of the company, is expected to stay flat in 2022 and then pretty much double in 2023. So analysts are projecting that 2022 may be a bit of a rough year as the reopening play continues to happen, but going into 2023 and beyond, they're expecting huge profitability ramp up. And so the thing is about ROKU, while they are valued at a very high PE ratio, as you can obviously tell from these 3 numbers, 31%, 36%, 57%, this company is growing at a massive level. It's one that I think is really popular in the United States, is going to continue to grow moving forward. So it's one I like going into 2022. You'll notice a pattern probably with all of these. I like picking companies that have been beaten down in price but are still growing their revenue and profitability, because this bodes well as an investor as it becomes a safer and safer investment. The lower that stock goes as you're getting better and better value for the company. Now ROKU is not a stock that I currently own as of today, but it is one that I'm looking at owning potentially in 2022. Now speaking of companies that I own, this is the first one that I own on the list, which is Chewy stock. I own 300 shares of the company, and for 2021 you can see that it went down 33.67%. Pretty much the same story as before. I pick companies that have long-term successful track records but had a bad couple of months or couple of years. Over the 5-year period, now actually when it says 5-year, the company's only been public since about the summer of 2019. So when it says 5-year chart, it actually just means about the last 2.5 years or so. But then the last 2.5 years, even with the downturn in 2021, is still up 68.53%. And so this 1 year timeline of this company going down and down in price, I think is a time to add to the company. Because once again, this is what I'm looking for, a company that is still growing its revenue and its profitability. Now 2022 is expected, this is fiscal year by the way, so that's actually obviously still in 2021, but this is fiscal year 2022. They're still expected to be slightly unprofitable, and then finally over the next year they're finally starting to ramp in profits, and then in 2024 that is really going to start increasing massively, supposed to 5x from 2023 to 2024, and I would project that 2025 and beyond are going to be much better than this number of 0.38 right here. Now in terms of the top line, in terms of the revenue growth, fiscal year 2022 they're expected to finish out with an 8.8 $9.92 billion, which is about 25% revenue growth. They're going to go upwards again in 2023 to $10.6 billion, which is 18.8% revenue growth. They're expected to do the same thing in 2024, grow about another 18% up to $12.56 billion. So Chewy is my largest position in my portfolio. So let's see, I own 300 shares right now. So I own about $17,000 and some change worth of the stock, and it has just been hit so hard in 2021. I think what's really interesting is that investors have sold it off because they're not adding customers as fast as they were in 2020. This company is adding millions of customers every year, and I think it's crazy that investors want to sell it down. It's trading at one of the lowest valuations in terms of price to sales that it has in the last several years. Typically speaking, this company's valuation on price to sales has ranged anywhere from about a 3 to a 5. Maybe sometimes in the peak it's been upwards of 6. But right now it's trading, I think last time I checked it was like 2.5 or 2.6, something like that. So very low in terms of its price to sales, and I think that's very attractive now that we're seeing a company that's about to start being profitable pretty much any day now within the next quarter or two. Now, next up we have one that has been very popular in the stock market, and I just mean absolutely destroyed in 2021. Absolutely just horrible year. Negative 47.86% for Alibaba, trading at $118 a share to start the new year. Now, the 5-year chart, similar story, still up 26.5% in the last 5 years. And I mean just pretty much every shareholder who's been a part of Alibaba since October of 2020 and beyond has consistently lost money, and lost money. This is trading below the low point of December of 2018 when people were worried about trade war and rising interest rates. This is literally the last time you could have bought Alibaba for this price was either early 2017 or late 2016, almost 5 years ago. It is absolutely crazy to think about how cheap this company is trading at, and consistently the company has continued to raise its fundamental guidance. Its top line revenues, its bottom line earnings, pretty much a similar story. Now, the one big risk here is, before we start going over these numbers, is that the company obviously has the big issues with China. There's big delisting risks and all the issues that go along with the communist Chinese government, and I don't even want to dive into that because I'm not as well educated and probably cannot inform you on the topic as good as many others can. But long story short, this company is either one of the two is going to happen to it in 2022 and beyond. Either A, this company will get delisted and it will probably continue to go down much lower in share price. If this company would get delisted, who knows how far it would drop. Maybe $50 a share. There's no telling. But if this company is not getting delisted and they indeed continue to thrive and be public throughout the U.S. markets, then I think this overshadowing communist government issue will continue to be put on the back burner. And I think people will begin to look forward and finally value this company for what it's worth. Look at the earnings per share. Let's look at the profitability first. Now, in 2022, they're going to do $8.5. In 2023, they're going to do $9.7, a 14% bottom line increase. In 2024, they're expected to do $11.6 in earnings per share, which is a 19% increase. And the top line revenue is just as impressive. $137 billion, a 23% increase. And then in 2023, $163 billion, an 18% increase. 2024, $192 billion, 17% increase. Across the board, any fundamental basis you could look at for Alibaba, it is just arguably one of the best companies in the world. In my personal opinion, I think as far as the Chinese public companies go, I think it is the best company as far as Chinese public companies go. I think that it has a bright future ahead of it. And I think delisting or not, the actual company itself will continue to grow, but investors are obviously worried about those risks. So just keep that in mind if you're going to invest in this company. But I think either one of the two is going to happen. It'll either be much lower 1 year from now, or it'll be significantly higher 1 year from now. Next up, we have Corsair Gaming. Corsair Gaming is the third largest position in my portfolio, and I currently own 500 shares of CRSR stock, so about the equivalent of about $11,000 or so in the company. Right now, in the last 1 year performance, it is down 39.5%. In this company, it just cannot get out of its own way. It seems like no matter what happens, this company continues to go down. And since the companies went public, we don't have a 5-year timeline because they went public in September of 2020, so they've only been public for about a year year and 3 or 4 months. And this company, since that timeline, is up 21.8%. But in the last 1 year, they are down 39.54%. So unless you either had access to this company when it was private, or if you were investing pretty much right at the moment this company went IPO within the first month, unless you're a pre-IPO or IPO investor, you're pretty much down in Corsair Gaming, because every moment since that time, and it's continued to go down. And I think that's why you see right here, right around November 16th, when the stock price peaked. Let's go to the last 6 months. You can see this better. So right here, when the company peaked, and then it's trended down and down and down, that I think the big part of that is because of tax loss harvesting. Because anybody who invested in this company during pretty much any time in 2021, you finished out down. Because it finished out the year at pretty much its 52-week low. The 52-week low for this company, I believe, was $20. What is it? Yeah, $20.05, and it closed out the year at $21 and a penny, so just $1 off that low. But this company is expected to continue growing. Same story as before. Like with the other ones we looked at, it's expected to continue to ramp that profitability and revenue growth. It's projected to finish out with $1.88 billion in sales, or 10% revenue growth. Projected to finish out with $2 billion the next year, 6% revenue growth, and then 2.2 up to 10% revenue growth. And profitability is expected to go up from 1.33 to 1.59, almost 20% earnings per share growth. 1.87 the next year, 17% earnings per share growth. Corsair Gaming is one that I have to say I am a little bit disappointed with in terms of their profit margins, but obviously, kind of like most companies, they're really struggling with the supply chain issues, the semiconductor shortage, and just basically the massive transportation costs that Corsair Gaming is having to pay for right now. But Corsair Gaming is one that I really like for the long term, and I'll be owning most, if not all, throughout 2022. And last but not least, we have the only dividend company on the list, and the only one that finished green. A teeny tiny little profit it eked out at 3.13%, and it did pay dividends during that time, so if you would have owned it in 2021, you probably would have seen returns somewhere around 6-ish%, maybe 7. But Lockheed Martin is one that I really like, and similar story, 5-year timeline, it's well into a green, right? If you look at the max timeline, this company's been public for a very long time, up 1,228%. This is a long-term growth dividend story. Now, this company will continue to raise that dividend year over year, and slowly over time, it will slowly grow its revenues and, more importantly, that bottom line profit, which is what you want from a mature business such as Lockheed Martin. 2%, negative 0.9, and plus 2% revenue growth. Like I said, very slow, but over time it will grow because it is a mature, one of the largest companies in the world, in fact. A very slow growing, mature company. This is much different than the other ones we looked at, but the earnings per share growth is looking to be consistent. 8% 8% profitability growth this year, and then we have a small 0.3% profitability growth next year, and then a 4.6% revenue, or I keep on saying revenue, profitability, 4.6% profitability growth in 2023. It's one that I'm really bullish on, one that I really like, and I think it's a hedge for if we were ever have any big announcement with any wars or any geopolitical risks such as that. Lockheed Martin is one that people typically free to when they're worried about wars or terrorist issues or other things like that. But overall, guys, we have ROKU, Chewy stock, Alibaba, Corsair Gaming, Lockheed Martin. Okay, lastly, and to finish this off, I will give my price targets. Now, once again, these are 100% estimates and guesses. So do not think that these projections are financial advice or by any means a measurement for what you should judge the stock off of. These are just what I think, and my guess, and my opinion, where these stocks might be at the end of 2022, 1 year from now, and we will come back to these stocks and give my opinion on them. So to start, we have ROKU, which is going to finish out at $300, currently sitting at $228 right now. This is 31% growth year over year. Chewy price target to finish out at $80. It is currently trading at $58.97. So this represents 35% upside for Chewy stock. Baba, the biggest potential upside in my opinion, I think will be a big winner, finishing out at $200 for the next year. Right now, currently trading at $118.79, representing a 68% revenue growth or stock price growth over the next year. Next up, we have Corsair Gaming, which right now trades at $21.01. I expect to finish out $30 a share by the end of 2022, a 42% upwards move. And then last but not least, a conservative gain of 12.55%. I expect Lockheed Martin to finish out at $400 a share, and right now it's at $355.41. So 1 year from now, we'll check back on these and see if I'm anywhere close. But other than that, these are my opinions for the top 5 stocks in no particular order, and we'll give the next top 5 for the total of the top 10 stocks and my price target for them going into 2022. Like I said, last but not least, to finish out the video, if you didn't get signed up, get that free $50. It's a free platform. There's no work whatsoever. You just sign up and use this link down below in the description. Get it up to 125, please. It would help support me, help support the channel, and you get a free $50. But other than that, guys, thank you so much for watching, and I'll catch you guys next time.